Hello, everyone, and welcome once again to another episode of Selling Greenville, your favorite real estate podcast here in the upstate of South Carolina. I'm your host, Stan McCune, realtor here in Greenville, Greer, Spartanburg, wherever you can think of here in the upstate of South Carolina. I work in that market, and as you can know from all my other episodes, you can find all my contact information in the show notes. Just reach out to me however is easiest for you. If you want to discuss real estate, want to discuss a podcast, anything like that, I am available for you. And as well, if you like the show, if you love the show, please leave a rating, hit that 5-star button. Apple has changed it recently. You might have to scroll down a little bit to find it. I'd appreciate if you could leave me a review for the show as well. That helps to get out to more people. And I'd just appreciate if you guys could do that. Today we're going to talk about the rental property market for landlords and the perspective of people either entering or exiting the real estate rental market. And this is very interesting because it's very clear that there are now kind of two factions forming. And these aren't really factions that are forming that are like liberal or conservative or anything like that. These are factions within the landlord market that are they are political to an extent, but they're not political as in right or left. But they are coming to opposite conclusions at the same time. I think it's important to clarify for a second that at least here in Greenville, and part of this may be the demographic of Greenville, but a lot of the landlords in this area do tend to be more right-leaning. A lot of more progressives actually hate landlords for whatever reason on the extreme side of things. I don't mean on the practical side of things. Obviously, there's the neoliberal camp, which, of course, I'm not going to get into too much of this, but there are more capitalist leaning progressives, of course. Plenty of them. That's the majority of them. But on the extreme side of progressivism, landlords really have a dirty name, and there's a belief that even in some circles that landlords shouldn't exist, which is kind of an absurd conclusion to come to, in my opinion. But that's an opinion that some people have. The majority of the landlords that I communicate with are more conservative leaning. They're more capitalist leaning. And that's for obvious reasons, because when you're a landlord, you see in real time the impact that more socialist type of decisions that the government makes, how that directly impacts not just the landlord, but also the tenants. And ultimately, nothing impacts the landlord that doesn't also impact the tenants. They are connected at the hip, because as you see more expenses come on the landlord, that landlord has one of two options. Either that landlord has to raise rent on his tenants or on her tenants, or that landlord must sell the property to someone else. And for that person to be able to justify the purchase, they have to be able to get money back in one way or another. So oftentimes what happens is when the property changes ownership, oftentimes the new owner wants to try to get rents raised in some way. And oftentimes that means the tenants get to a point where they can't afford it anymore. They have to get evicted or whatever the case may be. And then it gets, in a situation where it's a lose-lose, right? The tenant loses their housing situation that they had. They might have been in there for years. They no longer can be in there. The new owner has to have higher vacancy rates and has to figure out, has to make a bunch of improvements in order to justify the price increases. And it's just a ripple effect that happens. So we have to start by understanding that everything negative or positive that happens to a landlord gets passed in one way or another to the tenant. So all that to be said in the background here, the past 1.5 years, all right, really, going back to the start of COVID, has been quite the roller coaster for landlords. I mean, that's an understatement. And I know this from firsthand experience. I am a landlord. I don't manage my properties, but I own rental properties. And it's been quite the roller coaster. It's been obviously eviction moratoriums, and now there's a big debate because the CDC just renewed their eviction moratorium. The Supreme Court passed a ruling on the slimmest of margins, 5-4, that the CDC was allowed to have an eviction moratorium last year, but Justice Kavanaugh, who ruled in favor of that, said that if the CDC attempted to do that again and it was brought to the Supreme Court, that he would not be in favor of that and that he would want it to be passed legislatively through Congress. Well, guess what? The CDC just extended it again. There are states now suing, and it seems likely that the CDC will be overruled on this. But the trend, it's a very interesting trend about how now it used to be very local. It was always very local, the rules for landlords, the rules for tenants, but there is increasingly a threat of the federal government trying to take it over. And of course, this is way out of the CDC. The CDC, in my opinion, should not be telling landlords anything. That is completely, it's the Center for Disease Control. What are they focused on with who's renting and what the rules are for renters? They have no business. They don't have any idea what's going on in that marketplace, and they have no business ruling on that. That should be something that's done legislatively, and so I think that's absolutely out of control. Of course, that impacted a lot of landlords. It did not personally impact me. I'm grateful for that, but I do know that there are a lot of landlords here locally as well in Greenville that were impacted negatively by the eviction moratoriums. Additionally, the past 1.5 years, as most, if not all of you know, construction costs have skyrocketed. And it's just been kind of a crazy time as both supply of construction materials went down, but demand went up. And so we saw some things tripling, quadrupling in prices, and still a lot of that has not leveled out. And it's just a strange situation where, lumber mills were shut down and different things like that were deemed basically non-essential during COVID. But then guess what? Everyone's, in quarantine, sitting at home, thinking, okay, I'm spending way more time at home than I ever have. I want to improve this place. And so they're going out and buying even more construction supplies than they ever have to do more improvements in their home. And so we had this crazy situation where there's less things to buy to improve your home than ever before, but more buyers looking to buy those things. And so that caused a lot of chaos in terms of people renting, trying to improve the rental properties that they have. Not to mention as well, with all that demand, a lot of people are not doing these projects themselves. And so what happens, when they need to hire someone to do a project, there's shortages of labor as well. And so it's hard to get contractors, it's hard to get subs out to your property because those shortages exist as well. And so then the cost of labor also goes up. And then you've got, tenants getting stimulus checks. And some of these tenants aren't paying their rent because they have an out with the eviction moratorium, but they're getting stimulus checks, and instead of taking those checks and paying their rent, they are instead buying smartwatches and things like that. And I'm not saying that everyone is doing that, but I've heard plenty of stories of this type of thing happening. Where tenants have stopped paying rent and they've got more money really than they ever have because of all the government stimulus, but they're choosing to spend it on frivolous things rather than trying to get caught up on their rent. And it's going to be difficult when for a lot of tenants when they are finally allowed to be evicted. How are they going to get caught up on their rents? These ones that have gotten really far behind. It's going to make it very challenging. So all that to be said is well, let me back up for a second. In addition to all of that, so those are all on the federal level, things on the federal, things on the countrywide level. But in addition to that, we've got the state of South Carolina and Greenville County specifically, which we've talked about in the past, has a really inequitable property tax standard whereby landlords end up footing the bill for the public schools in our area. And that's kind of a strange system because landlords don't benefit from the public schools. People typically pay taxes for things that they benefit for. Well, landlords aren't going to public school. Landlords aren't sending, their kids to the public schools of their rental properties. The people, I believe, and a lot of people believe that you should pay for the public school that you're zoned for, and that's it. And only if you have an opportunity to send children to that public school. If you've got rental properties scattered all throughout the place, and you're paying property taxes for those rental properties, it shouldn't be footing the bill for the public schools. And so that's something that even our governor here in South Carolina has said that he wants to look at. The difficulty there, as we've talked about in the past on this podcast, is, well, if you take away all that money somehow, you've got to find a different way to pay for these public schools. And so I don't anticipate that that's going to change anytime soon. But unfortunately, that's put the squeeze on landlords, which again, as I alluded to before, puts the squeeze on tenants. Rental properties end up costing about 3 times as much in terms of property tax as owner-occupied properties. And that is because of this inequitable property tax standard. And on top of it all, I mentioned, so that's a state thing, but Greenville County specifically has gotten extremely greedy in terms of their reassessments of property values, and they see something happening here that they want to get in on. And this is the way all governments are. Even in Greenville, which is considered a more small government area, listen, when any government sees an opportunity to get more tax revenue, they are going to jump on that. They are absolutely giddy at the prospect of gentrification. That's kind of a bad word in a lot of circles, but guess what? At the county office, they love it. They love to see these housing affordability go down, because as housing affordability goes down, that means that they can raise property taxes on people. And so there is a moral hazard. We always talk about housing affordability with our local politicians, but getting them to actually be concerned about affordable housing is a tough sell, because they get more money coming into those county coffers when housing becomes less affordable, because then they can reassess at a higher price and justify it. And now you've got a situation where the county is bringing in more money because the cost of housing is going up, but it's putting the squeeze on so many people, and it's a terrible thing in a lot of ways. And it gets worse, because as those prices go up, fewer people can buy. But then as the property taxes then get raised along with the prices of the houses going up, the property taxes get raised, and so then those landlords end up having to increase rent in order to be able to even stay afloat. People think landlords have tons of money. They don't. Talk to a few people that have rental properties. Most of these people are mom and pop landlords that don't have a lot of money. And maybe they shouldn't be landlords. That's a whole nother discussion for a whole nother day. But the point is that the state and the county is not taking, they're assuming that landlords are all super wealthy, super wealthy investment groups based out of New York. And the majority of them are not. The majority of them are just normal people like me and you, just living here in South Carolina, that are just trying to have some rental properties in our investment portfolio. And the county just basically runs over all of us. And so there is all of this. I'm painting a pretty grim picture, right, for owning rental properties, because this is a grim picture that has been painted for me. The past year, I've heard a lot of angst from people that own rental properties that are like, what is the future of this going to look like? I mean, should we exit altogether? And I've seen some people start to sell off their rental properties because they're just like, I don't want to be a part of this future of, the feds telling me what I can do with my rental properties, and the feds not holding tenants accountable, and all of these other things. And the county, of course, having no checks and balances in terms of what they can do on taxing landlords and their properties. But this year, so that was last year, I really started to hear a lot of that angst. But I have heard a really different twist this past year, and a different faction emerge. This faction was not around last year. At least I did not deal with them. But during the Biden administration, this faction has become very prevalent. And the second faction basically sees the concerns that we've mentioned thus far, but they see even bigger concerns in the opposite direction. They see concerns about hyperinflation coming down the road with the Biden administration. Basically, spending money that we don't have. That money has to be paid for in some way. Either you can raise taxes on everyone, which is very unpopular, or you can do a secret tax, which is just inflating the dollar, just printing more dollars to spend for all of these different projects. Well, that's a tax that we all end up paying as our dollar becomes less valuable. We all know that wages don't keep up with the devaluing of the dollar. So if the dollar goes down in value by 1% in a given month, your salary doesn't go up by 1% in that month. It takes a while for that to get readjusted, and it never keeps up. Additionally, funny things happening in the stock market. We've heard about meme stocks and just a lot of speculative things happening. And again, let me get out in front and just say I'm no financial planner. I'm not a financial advisor. Nothing that I'm saying on here constitutes financial advice. Talk to a financial advisor for that. But this is just what I've heard from other people saying. There's a lot of funny stuff happening in the stock market. I'm a little bit concerned about what I have in there and my lack of diversification in terms of I've got too many eggs in that stock market and that Wall Street basket. Additionally, what's become really popular among people that tend to be into real estate is the cryptocurrency market. And I am no expert on cryptocurrency by any stretch, but I think pretty much everyone expects that there is going to be some major crackdowns on cryptocurrency and on trading that looming. And actually, there's a big debate right now going on about it. Again, I'm not very knowledgeable about that. I just know that is a major, major concern among a lot of people that trade crypto is that the government is going to come in and really kind of have a hostile takeover of that market. Additionally, meta concerns. Again, these are all just concerns I'm hearing from this other faction that is emerging. Just meta concerns about the U.S. economy and the fact that it appears to be lagging behind other economies, particularly China. What does that mean? Is a recession coming? Are we in a bubble? Not a real estate bubble specifically, but a economic bubble as a whole. And what is that going to do, again, to their holdings in the stock market, in equities, in crypto, all these other things? And here's where the people that have all of those concerns, here's the conclusion that they're coming to. They're coming to the conclusion that real estate is much safer than all of these other things. If I have rental properties, I am in a much safer position than I am if I have all of these other holdings and all of these other things that are so much more volatile. Because, people always need a place to live. And traditionally, real estate has been considered a very safe place to put your money because real estate does tend to appreciate at least on par with the rate of inflation. And here in Greenville, it's tended to significantly outpace inflation typically. And so that's something that's a conclusion that I'm now seeing a lot of people come to. So whereas last year I was hearing all these people saying, man, I think we need to exit some of this real estate that we have, some of these real estate holdings we have. Now I'm hearing a lot of people saying, okay, I don't have nearly enough real estate. I need to park some money in that, at least temporarily, at least to kind of get through the next few years, see what happens, theoretically after COVID is gone. I mean, who knows when we'll be able to say that. But they're concerned that this administration is just spending all of the money of the common folks, while also then putting regulations on things that hurt common people, just average everyday Joes, the most. And so I was talking to someone just recently, just this past week, about this, who is trying to move out of some of his stocks and equities and things like that, and trying to purchase more real estate. And I was joking with him, he should find a way to trade some of his holdings that he has in that market, trade it with someone who's in a situation where they feel like they have too much real estate and are trying to diversify in the opposite direction, because we do have these two very different camps that have emerged. And if only there was a way that they could just trade with each other. Of course, if the government ever found out about that, they would freak out. Obviously, that's not how this is supposed to work. But that was just something that I had a good laugh with someone about that this week. So what is a fair middle ground? Where do we go? What do we do with all this information, with all these conflicting opinions, all these different ideas about what's happening, what's the future of the country, what's the future of the economy? And I think we need to distill it all down to the core of what this debate is about. The core of this debate is over how safe an investment is. How safe is an investment? Is your investment in the stock market safe? Is your investment in real estate safe? Is your investment in crypto safe? How safe is that investment? And as I said before, real estate has always been considered an exceptionally safe investment. Now, what happened last year, people started to see some chinks in the armor, so to speak, of the safety of that real estate investment. They started to see, okay, it's not as safe as it once was. Now we're starting to see that, okay, whereas in the past, if we had a tenant that wasn't paying, we could evict that tenant, and we could turn that property that's non-performing into a performing property again. Well, some of that went away last year with the eviction moratoriums and some of the other things that were happening. And, now locally here in Greenville specifically, we're starting to see, and I'm hearing this more and more, that it's like, okay, again, the property tax problem is a real problem. At what point is it going to be that I get taxed so much to a point where I can no longer raise rents on people that they just can't afford this property, and I can't afford to keep it? Then what? Then what do I do? There has to be a tipping point. There has to be a tipping point at which it's no longer financially feasible for someone to have a rental property with all this overhead and to be able to charge that amount to the tenant. And so that is the concern over, okay, real estate is typically a very safe investment, but there are some things now that are a little bit more volatile that need to be considered. And so the question is now whether the safety that rental real estate affords, even after the beating that it's taken during COVID, whether that safety perhaps has been whittled down to a point where it's no longer safe enough, or whether all these other meta things that are happening actually mean the safety of real estate is even more important than it's ever been. And this is a great question, and it's one that deserves some really serious consideration. And I'm not going to sit here and tell you what my opinion is, because my opinion is, first off, again, I have to be careful with offering financial advice, but I have kind of mixed feelings on this. I can see both sides of it, and I personally believe that, the way I handle my own finances and my own investments, that there should be diversification, that there should be a little bit here, a little bit there, a little bit all over the place. And I have loved real estate investments as a whole, but there are some major concerns that need to be considered and that need to be addressed when it comes to this. You have to make sure that your numbers work. You have to make sure that your properties are performing, and you have to do your best in order to in order to ensure that a rental property isn't just doing well now, but will continue to do well in the future. there are some strategies that come into play there. I think that the cost per door strategy is a good one, making sure that you're not overspending on a per door basis. It can be a little bit challenging to have a bunch of single family homes that are rental properties, because single family homes cost a lot of money. If you can buy multifamily, that is in a lot of ways the way to go, because you can get multiple doors cheaper than you can if you're just buying a bunch of houses. However, the single family market has some opportunity in short-term rentals with Airbnb and things like that. But again, you have local government concerns where the city of Greenville doesn't like Airbnb properties. They want those to be taxed as hotels, et cetera, et cetera. And so there's a lot of considerations there. And of course, obviously, we don't want to see more federal government involvement in real estate. That's definitely something that we need to monitor, because the state and local government involvement that we have is bad enough, right? We don't need all these layers of involvement in rental properties. But at the same time, what happens if these hyperinflation concerns prove to be true? What happens if we reach a point where just the currency has just been devalued so much, and it's like, okay, basically what I own is just losing value constantly, but real estate does not. Real estate typically holds its value. So that is a major factor, a major concern that is worth considering. What if the currency gets devalued to the point that we plummet into a recession? These are the concerns that I'm hearing from people, and perhaps they're alarmist. Perhaps, we've heard a lot of these concerns for a long time. I used to work with someone that hoarded gold and silver, like actual bars of gold and silver. And there are people out there like Peter Schiff that certainly believes that as well. And he has been sounding off these alarms of hyperinflation for years and years, and it hasn't happened the way he anticipated that it would happen. And so, but there's got to be a point at which it does happen, right? And so we have to keep all of that in mind. And time will tell, obviously. I think we have to be careful and make sure that we get into the right properties, make sure that we make the right decisions, take everything into account, take into account what the federal government is doing, take into account what the local government is doing. So taxes are going up, right? Property taxes are going up. What do we do about that? Well, South Carolina has a program called ATI, Assessable Transfer of Interest. You can Google that. It's a way, if you're purchasing investment real estate, to try to avoid. It can help you to get your reassessment amount lowered, I think, by as much as 25%. I'm not an expert on that. Do your own research on that. As well, another good strategy that a lot have employed: purchase a property that needs a lot of work, purchase it cheaply, do all the work yourself. The county is less likely to reassess you at a higher price point, because they can't account for all the work that you've done. They're not that organized. Perhaps at some point they will be, but they tend to go more off of the sales price than off of the work that you've done. So you're less likely to get reassessed at a higher rate if you're purchasing something cheaply and then renting it out. So there's a lot of different things that can be done, a lot of different considerations. But at the end of the day, you have to consider the risk and the reward of real estate investing, and decide what camp you're in. And maybe there's wisdom in both camps. Maybe you're not the camp that's like, I'm going to exit all of my real estate, but maybe you're not the camp that's like, I need to buy up as much real estate as possible. A lot of people find themselves in the middle ground. I think that's where I find myself for the most part. It is still a fluid situation. We're still early on in the Biden administration, so we're still figuring out all that they are going to do, all that they are planning to do, which may hurt real estate, or it may make real estate even more of a safe haven than it was before. So that's it for today's episode. I hope you guys liked it. I hope you guys have a great rest of the week. looking forward to communicating with many of you. So reach out. My contact information is in the show notes. I'd love if you could leave me a rating or a review. As always, until next time, stay safe.